This week's Federal Reserve meeting is looming large. I feel like all we talk about anymore is the Federal Reserve's monetary policy and what's going to happen with rates and inventory, because it's that big of a deal. We're seeing something that we haven't seen in a very long time with this extremely volatile mortgage rate environment. And I'm going to give you some economic indicators that came out this morning. We're filming this at the beginning of the week. As we know, we've got a Fed meeting coming up with their comments happening later in the week. And that meeting will loom large. The last time Federal Reserve Chairman Jerome Powell spoke, he was adamant that they were going to continue to increase rates at the Federal Reserve. That's their plan. They're going to keep doing it. They're worried about inflation, and they're keeping focused on 2% inflation. So before I get into all that, let me tell you what happened last week from a macro perspective in the housing market. So we saw purchase applications jump 7% last week. They're still down 38% year over year, likely because there's less houses available, which we're going to talk about here in a second. We saw a bump in inventory last week. 1,734 more homes came to the market than the previous week. So we're up a little over 1,700 homes for sale. Hopefully that trend continues. Hopefully this is the bottom of inventory. We've seen that, and now it's going to go the other way. That's my expectation, my hope here. We'll have to monitor the data pretty closely. And lastly, we saw rates. They went down to 6.5% and now 6.375% as of Monday when we're filming this. So we've seen rates come down. And a lot of that is the result of the Silicon Valley Bank and Signature Bank crashes and closures that we saw just about a week ago. The banking industry could be a new variable as we evaluate the economy here, we evaluate the market, we evaluate housing. We'll have to see how that plays out because, again, those banks were leveraged heavy in crypto. Signature Bank specifically and Silicon Valley Bank was leveraged heavy in VC startups and bonds that were sensitive to interest rate hikes, which we've had a lot of. So we saw rates come down. The rate movement is good news for home buyers. We'll talk about that in a second. So right now with the Fed meeting coming up, as of Monday, March 20th, the CME Group has a 73.1% chance we see a 25 basis point increase and a 26.9% chance we see no movement from the Fed. Personally, I'd like them to go with the latter and do no rate hikes. However, it's very likely we're going to see 25 basis points, and that looks like it's already baked into mortgage pricing. So what does all this stuff mean? Here's the things I'm watching. We saw inventory bump up a little bit. This reminds me very clearly of when I was looking at showing activity in 2020 in the state of Pennsylvania. And that first little blip, when we saw inventory go up, was a sign of good news to come. And I'm hoping that's the same thing here with inventory. Because more inventory coming to the market is going to benefit sellers and it's going to benefit buyers, especially the sellers that want to go buy a home, right? So that's good news. We're also seeing rates come down below the mid-6 range. Also good news. That's going to keep buyer demand at a healthy level, and it's not going to have it wane off like it would if rates went up north of 7% again. So that's a positive here. And on top of all that, seeing that bump in purchase applications tells us that my interpretations of this data are correct and that we're going to see more homes sell because you can't file a mortgage application without getting a house. If I'm a seller right now, especially a seller who wants to go buy another home, I am not backing off the market. I am charging and playing offense and looking at properties aggressively. I'm also thinking about, I don't want to be caught up when all the homes get listed later in the spring because seasonally that will happen. So I'd be moving my time frame up to take advantage of this newfound buyer affordability and we're seeing that little bit of a bump in inventory. I'd rather be ahead of the bump than be in the middle of the rise. So if you're a seller, engage with an agent, have a strategy session about what's best for you to get your home sold and get you the best result. Buyers, this is what you've been waiting for, rates to come down a little bit again and get into that low 6 range. If you find a home that checks 60, 70% of your boxes, I would not be waiting for that perfect home to get listed because there will be more competition later in the spring. When rates come down, more buyers come out of the woodwork. So these are all good things for people that want to transact. it's also about to get a little more competitive for sellers and for buyers. All the more reason to get a competent agent who can walk you through your respective process. And that's the phone call I'd be making now if I'm thinking about transacting in Q2 or Q3. Have a strategy session. Have a phone call with an agent you can trust who knows how to interpret this data so you can make a winning real estate decision.